Hello everyone, welcome back to my channel. If you are here for the first time, my name is Lutando and I really hope that you are going to stick around. In fact, it costs you absolutely nothing to subscribe, to like, to comment, and even click that notification bell, so please make sure that you just do that. And if you are a returning subscriber, thank you, Gantanda nonke, and as I always say, you are absolutely amazing. So I recently posted a video about my vision for the year 2022 and I briefly touched on my finance or saving and investment goals. I kind of felt like I needed a separate video for that just so that I could dig a little bit deeper into it. So today we're going to talk about money. Yes, we're talking about our finances. Well, my finances. So, first and foremost, I do work for a financial services provider. I am at a wealth management company, and prior to that, I was at an asset management company. With that being said, I am not a financial advisor, nor am I licensed to give any advice. So, with this particular video, in no way am I giving you advice or telling you what to do with your money. I am simply just sharing how I handle my finances, how I budget, or how I structure my budget. So if you are actually interested in investing and you're not too familiar with the industry, it is recommended that you do consult and speak to a financial advisor. They will be able to assist. They can guide you and recommend products that are suitable to your needs and based on your risk appetite as well. So let's get into it. So basically, I put together a budget for myself every single year without failure. Yep, that's what I do. And the budget basically helps me to stay in line, make sure that I am focused, I can see my finances holistically, and I know where my money is going. So the applications that I use for that, nothing fancy, simply Excel as well as the app 22/7, which was created by Old Mutual. So with Excel, I simply just put together a table which has various different headings. The first heading is my fixed costs, which basically includes all my fixed costs that I need to pay every single month based on my credit agreement or based on the agreement that I have with that particular institution. The amount does not change. I am obliged or obligated to pay that amount to those people all the time. This can include rent, medical aid, car insurance premium, etc, etc. Then I also have a column for my variable costs. So these costs vary and change from time to time, meaning that they are not consistent. For example, petrol. Petrol does change depending on how much I've driven that month, where am I going, am I working from home or am I working from the office. So with petrol, I prefer to allocate a higher amount and have some change left over rather than being under budget and having to take more from my savings or take more from funds that I did not allocate towards petrol. Then the last column is savings and investments, which we are going to actually tap in a little bit deeper. So the different saving portfolios that I've invested in is a retirement annuity, ETFs, tax-free savings, as well as unit trusts. So we're going to get there shortly, as I have said. The second app or the second platform that I use is 22/7. 22/7 allows you to actually link all your finances so that you can see your financial position holistically. So you can link your bank accounts, you can link your investment accounts, you can link whatever dates that you may have, whether it's with clothing stores or with a car dealership, because you have to pay off your car with the bank. Sorry, not a car dealership, but with the bank. And it will then basically show you what your current net value is, and it will also show you what your debts are. It does also update itself constantly so that those amounts are current and up to date. The app also has a section that allows you to budget. Basically, it tracks your spending patterns in different categories. For example, petrol, entertainment, dining, and let's just say toiletries, or if you're going to a Discount or Clicks. It will then track how you spend or your spending patterns for a certain amount of time. Then it will tell you what your average is in those particular different categories, which actually makes it easier for you to put together the budget, because now you know how much am I spending when I go to Discount, how much am I on average spending when I need to pour petrol, and then at least I have a realistic amount or realistic figures when I am generating my budget. So we're gonna now focus on the savings and investment section. Alright, so for starters, we have an RA, which is a retirement annuity. A retirement annuity is an investment account or investment platform which is specifically used to save towards your retirement. You can only access those funds once you reach the age of 55. So although I started investing towards my RA in my 20s, I cannot access those funds until I reach 55. Why is it important for me to invest towards my retirement annuity? Given that the life expectancy is actually increasing, it's important that once I retire, I will actually have funds to be able to take care of myself and to continue with my standard of living as well, especially if there is no income coming in. So a retirement annuity is different and is not the same as a pension preservation fund or a pension provident fund, which is generally offered by your employer. A retirement annuity can be taken in your own individual capacity. You can choose to go invest in that, whereas the pension provident funds or pension preservation funds are an additional benefit which is given by your employer, as I have mentioned. So the general rule of thumb is that you should be investing between 10 to 22%. Some people say 10 to 20, some say 12 to 20, others say 15 to 22. So I'm just gonna give you the overall 10 to 22% should be allocated towards a retirement annuity or towards your retirement rather every single month. And this 10 to 22% is before your tax deductions or any deductions from your salary. So what I do is that whatever contribution I am putting from my employer, the difference basically then gets invested in the retirement annuity. The reason why I've started so young is because of compound interest and of course also with the intention of investing aggressively. The sooner you start, the more exposed you are to the markets, or the more you are invested within the markets, generally over a longer time frame. We hope to yield higher returns and better results than if you were invested over a short-term period. So that's also one of the reasons why I started early. And of course, practicing discipline. You need to be disciplined, guys. I know it's not fun. I'm sure some people are thinking, why would I want to start saving for retirement when I'm only in my 20s? I'm going to cross that bridge when I get there. Unfortunately, that is not how it works. I recently heard a quote by Joel Osteen, which said that the pain of discipline is less than the pain of discipline now is less than the pain of regret later. So I don't want to have any regrets. I'd rather just start making sure I secure my financial freedom and financial comfort now, even if I'm going to reap the benefits at a later stage. So yes, then we're going to move over to tax-free savings investments, which is a TFSA. These are offered almost everywhere and anywhere. Banks provide these, asset management companies provide them, even wealth management companies as well. And the nice thing with a tax-free savings is that it is tax-free, so you are not liable to pay tax on your capital gains and interest and dividends that are earned from the account. And you are able to invest a minimum of 500 Rand per month, up to a maximum of 36,000 per annum, and over a lifetime you cannot invest more than 500,000. So because of these restrictions, but I do want the tax benefits as well, I invest in a tax-free savings with the intention of it being for long-term investing. So it's not a short-term tool for me, meaning that I should not be tempted to withdraw these funds, to access these funds in anything less than 5 to 10 years. I need to leave it to be exposed to the markets, essentially to basically give me the results that I want, to generate the returns that will be beneficial to me. And that is also why I enjoy a tax-free savings. The nice thing with these investment tools and investment platforms is that depending on your risk appetite, you can actually choose how you want to structure your funds and where you want to invest those funds. So basically there is a conservative account or conservative investor where the products are structured in such a way that they're invested either in cash or banks, where there's less fluctuations that's going to happen. So if you put 10 Rand in today, most likely you'll either have 10 Rand tomorrow and the day after that, or if there are fluctuations and market movements, it will go down to 9.50, 8 Rand. It's not a substantial or a huge drop. or increase either. So if you choose to invest conservatively, just know that your gains are also going to be really, really low. But with conservative investing, I do personally do that in regards to like emergency funds. Excuse me, in regards to emergency funds. Reason being is, if I'm in an emergency and I need to access cash right now, I don't want to come back and say, oh no, I put 10 rand in and I actually really need to withdraw that 10 rand because I need to pay off something, and now I cannot because that 10 rand has dropped in value all the way up to 5 rand, and now I'm in a situation. So I've structured my funds in such a way that I am not investing aggressively with important emergency money. Emergency money is in case of an emergency and you need to be able to access it and without any issues. So with the emergency funds, the general rule of thumb is that you should have at least up to 6 months worth of your expenses saved. If for whatever reason you were to lose your income but your expenses still continue, you need to be able to pay it off. So how else can you do that? By accessing your emergency fund. So I've made sure to cover that nicely, structure myself in such a way that in case of an emergency, I have funds to access. In case of a loss of income for whatever reason, I have funds that I can access. Anything else, I can tap into and use it a little bit more towards investing and trying to generate wealth and gain financial freedom. The next risk category is moderate. So moderate is slightly in between. It does have an element of being conservative. It also does have an element of being aggressive as well. So the way that those funds are structured is that they can also be invested in different sectors or companies, but the way that it's done is so that it can take into account that risk appetite. So it's not maybe going too much into foreign exposure or equities, but there's a portion that's still actually added in cash and your banks, the situation. So though it's moderate, the returns will be decent, and the fluctuations will not necessarily be as huge as a aggressive fund. So aggressive funds are extremely volatile. They can go up and down as and when it pleases, depending on the markets. If there's market crashes, economic issues, political issues, it is affected by that. For example, when COVID hit, if you invested aggressively in certain industries, you would have seen what would have happened to investments. I know that I did, but we shouldn't act on fear. You know, there are professionals who are put in place to be aware of such things and hopefully structure the funds in such a way that it will return back to its original position over time, or even grow past that. So aggressive investing is for long-term investing. If you're going to invest aggressively and expect to see a difference in a year, that is not going to happen. You need to leave it at least for more than 10 years. Again, it goes back to discipline. You need to be disciplined enough not to access those funds, disciplined enough to also not react when you see those fluctuations and the variations in the unit prices or the funds or your balance or the money that you invested as well. So tax-free savings investments allows you to actually invest in different products across the range according to what your risk appetite is, and there are multiple funds that one can choose to invest into. Then we move over to exchange traded funds, which is ETFs. It's basically a basket of securities and bonds which aim to track an index. With the ETFs, you are able to access that and invest using an app called Easy Equities. Convenient, it's so easy to use, and what I like about it is that it does have a demo where you can have a demo account that allows you to play around with not your actual money but fake money, to see exactly how these ETFs work and how the app works, or how the growth and the market movements work as well. Furthermore, there is access to what we call fact sheets. Fact sheets give you more information on that particular fund. So it will tell you which industry it's invested in, whether it's Tesla, which would be like technologies, or whether it's invested in gold and mining, etc., etc. It will show you all the historical data of how it's performed in the past, any commentary from the asset managers, as well as what risk category it does fall under as well. And one of the best things about ETFs is that there is no minimum. You'll notice when you do a budget, you end up freeing up quite a bit of cash. and that you would have spent on unnecessary things anyways. So even if you have an extra 100 rand or 200 rand, you can literally just start off by playing around with it, which is what I did. That's where I started. I took a chance once it was recommended to me. You know who you are. Thank you so much for actually putting me on. It probably was one of the greatest things for me personally. I'm not speaking for any of you guys. I'm not giving you guys any advice. So because there's no minimums, you can add as and when you please. You can put money as and when you please, and always have additional contributions towards it if you want. The ETFs app allows you to invest in shares and crypto as well, and I believe there's also a tax-free savings option, and unit trusts. So it is quite diverse. You can invest locally and even offshore. Then the last one we have is unit trusts. So unit trusts are collective investment schemes. Also, they are invested in various sectors, industries. It's just there's a lot. There's so many different options when it comes to that. Also, some are invested locally, others are offshore, and most of them do start with a minimum contribution of 500 rand per month should you want to invest via debit order. And there's also lump sum minimum requirements as a once-off transaction if you want to do so, but there is no maximum. You would need to inquire with that particular institution because they do differ depending on that company what the minimum lump sum amount is going to be. Again, with the unit trust, it allows you to actually explore different products because, like I said, you can choose conservative, you can choose aggressive, you can choose moderate as well. Everything is structured differently depending on at what point in my life I feel like I also might need to access the funds. So if in the next 3 years there's a change, I get married, I want to go on a holiday or I want to go on a vacation, then I'll be able to access the more short-term funds, and then everything else that's long-term, I have no intention to touch it at all. Discipline. Discipline, discipline, discipline. Trust me, it's really important, especially us as young people. I think it's easy to live in the moment, to spend money. You look back and you're just like, I had money the other day, and you don't even understand what did you even spend it on. It wasn't even of anything of value. So don't get me wrong, there's nothing wrong with spoiling yourself and treating yourself. I believe in that. My weakness are handbags, sunglasses, and perfumes, and I definitely give into that, but I make sure I give into it once I have saved where I needed to save, covered all my expenses, and I have enough at least for my day-to-day activities as well to sustain me. So I don't want to come across as though I'm telling you guys what to do with your money, but it's important to make good life decisions and good life choices, and that's really the direction that I'm trying to follow, you know what I'm saying? Fortunately, I also had the privilege of being in a space where I worked with unit trusts. I got to see different things and understand it a little bit better. So everyone's journey is going to be different. I do acknowledge that, but saving is important. Investing is important, actually. But I hope you guys enjoyed this video. I hope you found it helpful. If you have any questions, please let me know in the comment section. If there's different videos that you'd like for me to talk about as well, please also add that in the comment section as well. And yeah, guys, that's all for today. So let's get our money, guys. Especially ladies, let's have our financial freedom. Okay, that's important. It's very important. Anyways, thank you so much for watching. Don't forget to like, comment, subscribe, and click that notification bell. Bye.